The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostics Trading Hour. Let's check out where the markets are at right now and what's all in play that we might be able to take advantage of. And what we got the S&P is down 14 points. We got the NASDAQ down 25. Russell's currently down 16 with the Dow down 110. So after that huge rise in the market, market's doing a bit of a pullback. Not a big surprise. We got gold right now up 22 points on the day. So just a killer run right there in gold. And let's see, looking over on at the other metals there, we got silver is currently up almost 4%. So just massive moves there. Up, like I said, 4% on the day. And let's see, we got copper right now. It's down a little bit. So not too much there, but you know, well, I guess it's about 0.5%, but down 0.145. It always looks small when you look at the quotes over on copper. And let's see here. I'm just trying to see if we got anything we might be able to take advantage of while we're on the show. Right now, not seeing a perfect contract for it. All right, so we got oil right now is down $2 on the day, so big move in oil. We got natural gas is up over 1.5%. We got corn right now down just $1. We got soybeans down $26. Massive move in soybeans. We got euro dollar is currently down, let's see, 87 pips. Pound dollar down 126 pips. And we got Aussie dollar down 12. Euro yen down 158. US yen down 43. Pound yen is currently down $2.06. So getting some massive moves over there on our Forex pairs. And let's see, we also go dollar CAD, it's up 22, dollar francs up 87. So, you know, pretty cool. I mean, just a lot of volatility going on. And let's see here. Let's check out what else we got on this we might be able to do. I'm trying to check out a couple other trades. I'm always looking for trades to see if there's some trades that we can possibly do. But they're coming up, you know, silver, copper, gold. And copper's just now closed down, so I can't really use that one anyway, so we can just mark that one off the list. And let's see, so if we get rid of copper, look over the pits have closed. And Nadex, most of their markets, they'll open on like the Globex or like, you know, 6 o'clock on most markets, but they close on the pit on most of them. Every once there's a couple of them that will go a little bit further. But silver looks like checking it out. It's just sort of oscillating right now. Not going anywhere with a lot of commitment. If it does decide to move, really either way, I'll be looking around at the 2010 contract. So checking the 2010, that's the one that's sort of got my eyeball on. 2010 expiration on silver. And just watching to see if it'll actually take off in one way or the other. And then looking over at gold, looks like it had a little bit of an upside move to it, which usually if it has an upside move to it, silver does as well. So we'd be looking at, just trying to see if I can find one with a good risk reward, and there really just isn't one that I like. I'd want to get below 11.24, and the best I get is like a $10 reward trade on that. So not liking that. Neither one is broken out either way yet either. So they're both just sort of oscillating at the moment. I'm just watching. The thing takes off, then I may have a silver trade. Got about 15 minutes before the silver pit shuts down. Okay, so let's go on over and let's see what we might be able to find for the news trades coming up, because this is a pretty big news week. It's been all quiet. We haven't had anything major happening. But we have FOMC announcements coming out this week. We have GDP interest rates coming out this week. We have not GDP. We have pound interest rates, GBP. Pound interest rates coming out this week. We have euro interest rates coming out this week. We got the non-farm payroll, and so we got a lot of good news opportunities that we'll be setting up. I'll be going over the stats with y'all as we progress throughout the week here. And I'm going to get this trade ready just in case. Okay? Just in case I see what I want to see to make it trigger. Okay? And what I'm talking about, the trade, I'm talking about the silver 2010. I'm looking at a potential buy on it. And I just want to see a little bit more movement, at least in gold, if I'm going to take that trade. So, because gold might move before silver does in this case. All right, so looking over at that, now let's go in. Let's check out what some of our news trades are going to be for the week. I'll do a summary, and then we're going to go back after I do the summary, and we'll go into some details on at least a couple of these, and I'll lay out, some potential plans for you to be able to go in and execute those. So let's see here. If we go in and start off with today, Switzerland is a bank holiday right now, and we got, let's see, Spain and Italy had their PMI. Manufacturing PMI came out of Britain. Usually not a horrible report, not a great report, but it has some okay stats on it. Let me see. I'll pull those up. Like I said, just in a minute for you. I'll get all those uploaded, and we can go through them. But just usually not the main one I'm looking at. So, okay, that's Thursday. There we go. It's like, wait a minute. PMI is a good report. Okay, so today, today Japan is on bank holiday. There we go. We got to get everything on the right day. Got to get back in the groove after the new year. So too much partying going on. But we got Japan right there, bank holiday. Okay, going on today. We had pending home sales come out this morning on the U.S. They were worse than expected. Quite a bit worse than expected. Came in at 0.2 on an expectation of 1.1. That was better than the last number, but it still was much worse than what was anticipated. Okay? So, like I said, being worse than anticipated, had a little weight on the markets, and, it should have had an impact on any trade that you did really. It sort of moved a little bit of everything. We had a pretty, but most of the movement we had happened even earlier in the morning. If you're watching this morning, it's like the markets opened up, and it was just, bam, everything flew. So, like between 8 and 9. Let's see here. Trying to see what we got. I'm always looking for something. Show me a trade. Show me the money there. All right, Tuesday. What do we got coming up? Tuesday, Wednesday, Thursday. The one thing we have on Thursday is the PMI, and the only report on the PMI, the details. Let me give the stats on the PMI and the ISM. We talked about this on Tuesday. And the stats on it show us that the average move on the PMI. So what I'll do is I'll open up a pound chart, and we'll just walk through how that trade would have, should have, could have looked. Okay? And here we go. Grab this. Move it over to pound. And roll the chart over here for you. Sorry, it's taking 1 second to get everything loaded up. But I was thinking we were going to have another trade. That's what I was going to start off with, but it just did not happen. Okay. I was looking for that silver trade to either go long or short, and don't like either one of them. So pound dollar, if we go in, we check out the stats. We're going to get pound dollar, we're going to get pound yen. And if you go back and you watch Tuesday's show, I gave you this information. On pound dollar, we had an expectation of about 60 pips movement. On pound yen, we have an expectation of about 70 pips movement. And that report came out this morning on the manufacturing PMI. That report came out at 4:30 in the morning. And let's see if the thing. Yeah, it's quoting Central Time right now. So we have to go to. Let's see if it's 1:15. We're going to have to go back here and go to 5:30. All right, so here's where the report comes out. And we got a little bit of movement on it, but really not a major move. So if we go, 3:30 when the report actually was released, what kind of move did we get from high to low by 5:30, because that's what the stats are measuring. 35.59. We got down to 35.35. So you're only talking 25 pips on the trade. Usually looking at 60. Now, when I went through the stats, and these are all these like little stats that you got to sort of pay attention to the details in them, okay? And I said 50% of the time, actually a little over 50% of the time, it breaks 50 pips. So it doesn't have that higher probability break. It just, when it moves, it has that average range. So understand that only half the time is it going to break 50 pips. That might be the one you avoid. But then I said the pound yen, which would be sort of my pick out of the group. And let's just see how it did. I haven't analyzed all the details on it, but let's look at it right now. Report came out again at 3:30. Wasn't a lot of movement. Market sort of waited. Now, when it started moving, it really started moving. But at 3:30, we got very limited movement. We got basically about another 20, 25 pips also on the pound yen. And it had a 67% probability. So this is one of those 33% of the times that it doesn't move at least 50 pips. And the average move on it, 70 pips. So those trades both would have had a rough time. So what are some lessons you can learn from this? Now, you couldn't have done these trades this morning either. So as far as straddles and strangles, you could have done them on Forex spot, depending on your broker. But one of the lessons that you can learn from this trade is when you're post-holiday, pre-holiday, okay, and news reports are coming out, understand you probably should expect less volatility. Now, it's sort of weird. You don't think more volatility because less liquidity, but a lot of times you just don't have as many people involved. So especially on a day after New Year's morning. A lot of the Forex brokers are closed throughout the world. Some brokers are open, some are closed. Some don't even start feeding data. I found out that like FXEM last week, they shut off like at noon. So you just lost, which was one of the biggest FX brokers in the country, just lost all of their traders' activity. Boom, out of the gate. So, be aware that there's that holiday impact. And a lot of traders, I talk to, they learned, hey, I think I'd just rather not trade the day before and after major holidays. And I'm like, that's not completely unwise. So that's actually, somewhat intelligent to, avoid the markets and just say it's okay to take a few days off. One, it's healthy for you, physically, psychologically, but also it can be healthy for you financially, just because you need to get some experience doing it. So if you're going to ever trade holidays, you need to have some sort of way to go back and do back testing data and trade that same holiday like the last 5 years, just to see what happened. And I'm talking about the true back testing, not like the, I built an algorithm, I go back and hit a button, I see what happens. I'm talking about the kind that where you're the person sitting in front of the computer hitting the button. You need to be able to go back and do a market replay where you can't cheat, and you place your trades and see how it goes, just so you can see what kind of things are happening around those holiday hours. But looks like both of those would have been flat, but Nadex wasn't open until 8 a.m. See when able to get into it. So after this, we're going to go into the one report you could have got into, and we'll talk about the stats on that. Stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So we're checking everything out. Looks like that silver trade did finally fly on up in the last second there and moved on up as gold flew up. I knew if gold flew up, I didn't know, I guess, but I expected if gold flied up that we'd see silver follow suit. It did, and but wasn't really on the air. That those few minutes can sometimes make all the difference, right? Anyways, but you knew what contract to at least be paying attention to. So hopefully, maybe some of y'all were able to maybe look at that. Let's see if we can find anything else that might be a good trade. I'll keep my eye out, and we'll just keep moving on forward. Let's see here. What do we got? We have the stats. Okay, we were going over the stats last, and what I have on the stats for, we had 2 trades that we were looking at. We looked at one trade, the pound dollar, pound yen, based on the pound PMI manufacturing report that came out this morning. However, you couldn't have traded it on Nadex. You couldn't have done a straddle, a strangle, a binary, a butterfly, whatever. The best you could have done was try to actually trade the actual trade itself. And now, majority of the time, obviously, it goes in the direction of the PMI. Okay, so just maybe here is a tip for you. Let's say we're trading spot Forex. Okay, and it had dropped down some. And you notice that, hey, the report was expected at 58.3. It came in at 57.3, maybe using investing.com or Forex Factory or whatever it is that you're using. But you notice that the price actually did come down below expectations. then you most likely you should expect, because the majority of the time it does actually follow suit on how often basically does it go in the same direction. And so if we go over here, at 3:30, the announcement actually right there at the end of the 3:30 hour comes out. We actually should expect a drop in the pound dollar. And even though it was a very small drop, you could have got in on that drop that happened later in the day by being aware of that, by trading the pound dollar, seeing that it was a negative report. It didn't really take off too much, so you had plenty of opportunity to be able to get into the trade. Maybe it goes down, it does a retracement, you hop back in, and maybe you just grab 20 ticks, or maybe you decide to actually follow the trade all the way down and have a stop right up here at the high from before when the release came out. There's a lot of different ways to trade the news. I just want to expose you to some of those different ways because so many people write it off. And the number one thing is, I don't care if you're a news trader or not, you better be aware of the news, because the news is going to move the market and it surprise you if you're not aware of it. I mean, I don't know how many oil traders have had, what just happened? Why did oil just move like $2? And I'm like, well, the inventory report came in at half of the expectation. What's the inventory report? Well, that comes out every Wednesday at, they're like, oh. And I'm like, yeah, you need to be checking that every Wednesday. You better be very aware of that, because that also changes the entire dynamic up every Wednesday. Wednesday's a different day to trade oil than any other day. And so it's like oil inventory day, trading day. There's Monday, Tuesday, oil inventory day, Thursday, Friday. So you need to be aware that it's its own unique day, and it requires a little bit different skill set. If we go on over and we can check out let's see what we got. We got the ISM report. That one came out. And we had there's a variety of trades that you could look at. There were only a couple that were really worth, diving into, unless you're doing butterflies or whatever. But, like butterflies into the news type thing. One of those being euro dollar, one of those being pound dollar. And the report was released at 10 o'clock this morning. So 10 o'clock Eastern, 9 o'clock Central. And so what kind of mood did we get on that? Let's look at it and see, was it huge, or had all the movement already happened? Because that's what I sort of noticed this morning when I was doing my trades, is there was just a bunch of movement. It was great early in the morning, and then it just sort of flattened out before things started turning back around. So the report came out at 9 o'clock. We saw a little drop down, a little drop up, but if we take it on out to 11 and go to right before the news, 36.46, and if we go all the way up here to 11, 36.75, so we got about 30 pips up, and you got, let's see, right here, 8.45 there, you got about, what was that, 15 pips down. So, you got about a 45 pip range, still way under the expected range of 61 pips. Again, we're post-holiday, okay? So, very post-holiday range. The market usually does go in the favor of the report for that currency. The ISM came in, you could say it came in good, but the expectation was 56.8, it came in at 57, and that basically is met expectations. So, you really shouldn't expect much of anything from the dollar, good or bad on that, because it was right at expectations. So you're looking for, was it better or worse than to pick a direction? Didn't have that. You might have been able to get on a decent little straddle this morning if you were looking at them, or strangle really cheap, and maybe come out at break even, maybe take profit if you got the right one at the right time. But again, post-holiday news, not usually as much activity. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of this special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. I was trying to figure out, I don't know how I changed the setting, but somewhere I changed the time zone setting, and so I was trying to get that back, and just to let you know, in case you are a user of Think or Swim, go to Style, and then just go to Settings, and right there on that page, you'll actually be able to change the time zone for that specific chart. So that will help you out if you're wanting to do that to make it easier. And when I trade Nadex, I make sure all my charts are on Eastern Time, because Nadex expirations are in Eastern Time, and it can be very easy to get confused and place a trade based on the wrong information. Not something that you want to do. Okay, so we got all this right here, looking at, what kind of movement did we get? We really didn't get much at all, either on the pound dollar. So, what am I going to log in my trading journal? And this is one of the things that you'll hear me from time to time really talk about, is that you need to have a trading journal. Because otherwise, you're not really going to learn all the lessons. You're going to go, oh, that's I probably shouldn't trade, this report the day after news, because it really doesn't seem to have a big impact, even if it is off or isn't off that much. There really just isn't much of an impact on this. So maybe ISM is a great report to trade, but not the day after a holiday, especially not the day after New Year. So that way next year you don't make the same mistake. Okay? And so you need to start logging that trading journal. So one, you remember, because you remember it better if you write it down, type it down, whatever. And two, you start building all these lessons that you've learned that you can go back and review. Okay? And I'll even do like screenshots of charts, and different things like that. So I'll go through, I'll do a screenshot of the charts, I'll put comments on trades that I did, what I did, how I did it, and I'm not saying I'm perfect at it. I log every single trade perfectly, and I go through, and but I do try to make sure I do log that stuff, take screenshots, mark them up, put things on there, especially if I'm in any kind of learning phase, where I'm going in, or if I learned something. That's probably the biggest reason I mark it. Like, this was a unique event, and I want to make sure I remember this. This impacted me this way. I want to make sure I remember this. So those are like the things that I have to log down. Okay. Let's see here. Going in, and we'll get that. So that we got that. That's really all there is for the week. I mean, that's really just a quiet week, but we got a big week, New Year's week. Like I said, week after that, the one that's coming up, that's going to be the good. We're going to have the NFP. We're going to have the FOMC. We're going to have all the bid rates, everything else. As far as tomorrow, I mean, there are a couple things. Be aware that construction PMI is coming out tomorrow morning at 4:30 a.m. on pound dollar. That'll have some impact. Be aware that the crude oil and natural gas inventories, storage reports, are coming out tomorrow, Friday. Usually they come out on Wednesday and Thursday, but they bumped crude oil to Wednesday, and they went ahead and bumped, for whatever reason, natural gas, I guess because they prepped the day before maybe or something. I don't know. But they bumped that one also to Friday. So be aware if you're trading oil and you're trading natural gas and you're used to those Wednesday, Thursday inventory reports, they're coming out Friday. Okay? Natural gas will come out at 10:30. If you're a natural gas trader, put an alert to remind yourself because it's not something you're used to. Same thing on crude oil. Put a reminder like at 10:45 on your phone to go off, say crude oil coming out today. So that way, it'll set off the alarm and let you know, and you'll be able to adjust, tighten stops, whatever you need to do, however you trade. But you'll just be aware of it. If you're trading oil, you need to do that right now and set that alarm. Okay? Now, you will forget. You're just going to forget because that's not when it happens every week, normally. Let's see. What do we got? We got Monday, Sunday, Saturday. Nothing happening really over the weekend. Monday, Italy's going to have a bank holiday. Shouldn't be a massive impact on the markets. And then we're going to have now here's the thing that's going to be happening. I think Monday is going to be the big impact. We'll have services PMI. We'll check out the stats on that tomorrow. We'll go into that a little bit more. But the chairman nomination is going to be happening. And I don't think there's going to be a surprise. Everybody knows what's going to happen. Yellen's going to get put through. But the vote's still going to happen. Okay? And so the market's going to, I expect a reaction from that. And this is different than anything else, because this isn't even like Bernanke's nomination. Because I'm not talking about the reconfirmation and continuance. I'm talking about like the original one, because we weren't in the mess the exact same way that we're in it at this second, and with this massive pumping. And, they did, I think, $105 billion Tuesday. They're talking about tapering. But I think they did over $105 billion. So she gets to come in and figure out how she's going to, if she's going to, unwind all this stuff. Or by unwind, I mean is to start buying as much. Okay, I'm not saying they have to sell them off because they can just hold them to maturity. Okay, because all the profits go right back to the U.S. government. A lot of people don't understand that. When the Fed buys bonds from the U.S. Treasury, let's say they make 5%. Obviously they don't, but let's just say they made 5%. Okay, then any profit the Fed has, because it gets the right to write unlimited checks without any money in the account. It gets to make money by writing a check. So when it writes a check to the Treasury and it buys, $1 billion in bonds, and then the Treasury ends up having to pay it through tax income, has to pay 5% to the Fed. The Fed every year at the end of the year has to take all of their profits and give it, all of them, and give it back to the Treasury. So there is no unwinding. Okay, there's no what's going to happen when the Fed sells off all these bonds? They don't have to sell them off, because all the profit's going to go right back to the Treasury. Okay, but what about when they stop buying them? That's a little bit more appropriate. Question to ask. And I don't mean the $85 billion. That's nothing. Okay, you think that's a lot of money? Let's go over here. Let's look at this. This is the Fed Reserve's website right now, today. January 2nd, you're thinking, oh, they're going to back off $10 billion off of $85 billion a month. $83 billion today in their temporary operations, which allows them to do additional side transactions. $197 billion on New Year's Eve. Wonder why the market finished on a all-time high? There's your answer. Day before that, 102. Day before that, 94, 46, 42, 28. You see it? Like 26, 15. The man's like 11. So, Bernanke's like, we're going to finish on a high, and I'm going to let this person take over and go down in the history books as the man who saved the recession and somebody else crashed the market. Because when I left, that thing was on an all-time high. But what a interesting, spectacular way to do so. Let's go and just do $200 billion. I know it's reverse repos. I know it's shorter term. I know the whole point is to basically for them to manipulate interest rates and raise them, theoretically. But the impact is undeniable. And what happens when you go from $197 billion down to $83 billion? Well, then that's not as big of an impact, and so now you see the market go down a little bit today. But it's just a game. This whole game of, we're going to cut back $5 billion out of the $85 billion, or $10 billion out of the $85 billion, $5 billion out of each of the two programs. And you go over to the operations, and there's no operations yet at this time. So, but you can look at all the prior operations and see all the purchases they've done, and it looks all big, but this temporary thing, and people go, oh, well, they've been doing that all along. No, they haven't. Okay? If you go back, and you can actually pull all the historical data, you can download all the historical data on them, then you can actually see that they didn't do that. If we go and we pull it from now, and then it may end up showing this as a, we'll go back. Let's pull a year back. There we go. And what you'll find out is they didn't really, they've done them like a few of them, okay? And I think I got my dates backwards. So let's do 01, 02, right there, 02 to 2012 to today. So 01, 02, 2013. And it'll take it a minute to pull the information up. It goes in. But what you'll start seeing is, let's start looking at how often these things actually happened at a certain point. And check this out. We see, February. We see, okay, they went in, they did not even, 0.1 of a billion, okay? And then we go in and we see, March. And then we go, so they haven't been doing the temporaries all along. And that's what I want you to notice. This is a new phenomenon. And it really started picking up in September, where they started doing $3 billion, $4 billion. And I was blown away by that they were throwing in $3, $4, $5 billion at a time. And now they're doing $100 billion. So this is not new. It's been happening. This is not been happening all along. It's not something the Fed has always done. It's not been happening throughout the financial crisis. It's been happening since September. And that's when it really started tracking up. And remember when they sort of surprised everybody by not saying they were tapering, And a lot of people thought, 3 out of 4 analysts thought they were going to begin tapering. What they did is they're okay, well, the market reacted really badly to thinking that we were going to taper, so what we should do is, let's implement this program over the next 3 months, and then we'll taper. But this is going to be pushing everything so solid anyway, it won't matter. So now they were able to say tapering out loud. People didn't freak out. And it's just really interesting to watch how the different pieces come together. But they mentioned tapering, and then people freaked out. They mentioned tapering this time, the market rallies. And there's a lot of different ways to put together the dynamics of it. And, it's taking cash out, but it's putting cash in. So there actually is a dynamic, and I've actually built an entire trading system built around just the time of day that this happens. And it does impact the markets. So it's not simply the simple mechanics of how the treasuries are going in and treasuries going out, because a repo is an overnight rate. But it's also, there is a dynamical impact on the trading markets at the time of day that they place these transactions. And it's pretty cool. If you go look at 11 a.m. and start seeing what happens at 11 a.m. over and over and over again, day after day after day, right between 11 and 12, you'll actually see that impact. And let's see here. What else do we got going on? Let's see if there's any other markets that we can take advantage of. We got the S&P. And even on the S&P, you'll notice this morning it started hesitating right, around 11 o'clock for a while, and then it pulls off 11:45 when the operation ends. Like, that's when it drops down and starts making new lows again. So, but it's there's the fundamental. I guess this is one of the things that all traders have to come to understand, and I think that many do, is that there's the fundamental reality of what this is supposed to do and how it's supposed to work. There's a fundamental reality of what a P, all these ratios and everything else are supposed to mean, and what that should do to the stock and the stock's valuation and the stock's price, and all that may or may not be true over time. Time will tell, but there's a reality of what impact does it have on the market. And so that's really where I'm going on the Treasury thing, is what impact is it really having on the market? Because I noticed there are definite patterns that you can take advantage of based upon how much they're doing in Treasuries and at what time of day they're doing those, even though they're only doing repos on some of these. So there's a huge impact. You just got to take the time to go back and look at the charts when they all happen, and what is the measured impact the day of, the day after, the overnight of the volume done on that repo when they did it. So it's pretty sweet. But it does take some research. You got to go back, you got to pull all the data. And let's see, what else do we have? I'm looking over. Yeah, S&P still sort of hesitating down there, not doing a whole lot for us. Oil, we got some good stuff going on there. It's been getting nailed most of the day anyway. And see if we have any other possibilities. Yeah, it's just flying down. Great trade. So right there, great binary trade. Break, basically selling 96, 20-year higher. So very, very sweet trade there. Let's see if there's anything. I wanted to see if there's anything we can catch. But going into the last 15 minutes, it's going to be a little bit hard to catch anything. But you never know. And euro dollar sort of pausing out right now. So I'd be continuing to watch that oil trade and look at a potential 230 contract, depending upon how we close up here. Might be a good one. May not go anywhere. But just check out the binary trades, check out the binary scanner. It's going to help you find the contracts you're looking for. You don't want to be hopping around everywhere trying to find 100 contracts to figure out which ones you want to do. Now, that's wrapped up the entire week for news, because there's not that much. But there is, like I said, a lot of news next week. We're starting to get into that. Talked about Chairman Yellen getting nominated, all that fun stuff next week. We'll have the ISM non-manufacturing PMI coming out, medium impact report. It'll say high impact, but it doesn't have just the overwhelming impact. We'll have trade balances on Tuesday, not a big deal. We'll have some CP. We'll have a lot of numbers coming out of China. That can have an impact, depending on how good or bad it is. If it's really bad, usually more often than not, that could have the impact. But I usually don't pay too much attention to the China reports for the matter of consistency impact. And then that you more would pay attention to those maybe in relation to looking at countries that are closer to a lot of their economies are really influenced by them. Japan, Australia, things like that. So looking at their currencies. All right, when we come back, we'll do a quick summary on what to expect next week for the big 3 days of announcements that are coming out. Those are the ones that we're really going to want to focus on. Stay right there. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So just checking out where we got or what we got coming up next week, so that way you're ready on your news calendar to know what you need to be watching out for. And as we were departing there saying, hey, let's go ahead and do a quick recap on the 3 big news days next week, which are going to be Wednesday, Thursday, and Friday. So on Wednesday, we're going to go in, we're going to have the ADP non-farm employment change. That's going to be a big thing. Also, there's another thing. The German Constitutional Court is going to be ruling, and this was this happened actually before I did some trades on this, but they're going to be doing a ruling on the constitutionality of the ECB's outright monetary policy transaction. So this could be like one of those, and everybody's expecting them to rule with it because they have on the other ruling so far. But if you go in and they do decide to strike it down and they lose basically the biggest, economic power of the main EU there, that could obviously have a massive negative impact on Europe. So just be aware that that announcement is coming out sometime on Wednesday, and if it came out negative and they said no deal, there definitely would be some implications. So just, make sure you look into it. Just be aware of it. That's what I want you to be aware of. And so, because all of a sudden you're like, what happened? Why did the euro just get crushed? Well, you're probably going to start seeing German Constitutional Court rulings and headlines, okay? ADP non-farm payroll coming out at 8:15. So not as big as the NFP report itself, but still, obviously, you need to be aware of that. It's going to come out at 8:15 on Wednesday. Also, you're going to have FOMC meeting minutes, not as big as the rate and press conference, but still, that's going to be the details, the inside look. Why did they taper? Why are they saying this? Why are they saying that? So there's going to be a lot of going on, and just expect some crazy volatility when it comes out. And if it's non-event, great. But you just need to be like, is it worth trading at this time when I have no idea what's going to happen? So we'll have some retail sales building approvals coming out of the Aussie. So if you're a nighttime trader, you're going to have some opportunities there. If we roll on over to Thursday, you're going to have the asset purchase facility, the official bank rate, the MPC rate, basically all the pound stuff coming out at 7 o'clock. Okay? Rate statement comes out at the same time, too. So they always say tentative, but it always comes out at the same time. So, or at least always has, as far as I know. Never seen it come out at a different time. So 7 a.m., that's going to come out. And at 8:30, we're going to have, actually at 7:45, we're going to have the minimum bid rate on the EU. Really doesn't ever have an impact on the EU itself. Like as far as the euro dollar, usually don't see it unless there's a surprise. Unless they're like, oh, by the way, we're going to change the interest rate. If they don't change the interest rate, which most of the time they don't, then there will be, either way, no change would change. There will be an impact on the press conference itself when it comes out at 8:30. And so that's usually the trade I'm looking to play, is that 8:30 trade for doing straddles and strangles. And we'll talk about that next week. I'll walk into that one for more detail for you so you can check it out. And I'll also go into, again, I know I went over this a couple weeks ago, but I'll go into how I'm actually going in on a lot of these strategies when they overinflate the premium, and I'm taking the premium. I'm going the other direction. And so I'll show you how you can take advantage of that. And then on Friday, we're going to have, CPI out of Switzerland in the morning. So, dollar franc, to be aware of that. Manufacturing production out of the pound at 4:30. Big report to be aware of. Employment change, unemployment rate, NFP, unemployment rate, all this stuff is going to be coming out. And remember, even the Fed monetary policy statement is going to be like the last policy statement without Yellen being the head of the Fed, right? So, anyways, a lot of movement on 8:30 on Monday morning. We'll be looking at dollar CAD pairs. We're looking at probably 6 different pairs to trade on that report. And I'll get you all the details next week. And we'll see you tomorrow. Stay tuned. We have another great show coming up for you right after this.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.